Welcome back, grade 12s. I'm sure you are totally focused on us because remember, we are doing a new section. You've done a bit of it in grade 11, but primarily the focus of this part of your curriculum is on the grade 12 content. So please, we want you totally focused and to understand what we are doing. Okay, moving on with VAT, we're dealing with exempt supplies, exempted items. The law does not subject certain products or services subject to VAT at either the standard rate or zero rate. In other words, no VAT is charged. Let's look at examples of these. What would these be? Interest transactions, export services, childcare services, and a host of others. I would urge you to go through your material, your LTSM, and see if you could find any other exempt supplies. Remember, what we are saying is that these supplies are not subject to VAT at all. So when you see it in an exam, when you see it in a question, remember that this particular item has no VAT charged for it. Important to remember. Okay, and then zero rated. Now, what is zero rated? Zero rated are those supplies that are taxed at a percentage of 0%. In other words, your VAT charge is a rate of 0%. Now clearly, there's a difference between this and exempt supplies, so do not confuse the two. Zero rated items meaning they are subject to VAT, however, they are rated at 0%. In other words, no VAT is charged. But this one here, the rating could change depending on the needs of the country. So if we look at the items that are zero rated, it would be your brown breads, your milk, your maize products, rice, oil, etc. Clearly you can see this has been done surely for the benefit of the community. But the Honorable Finance Minister, currently Pravin Gordhan, can at any time, if there's a need, some items could be added to the list or items could be removed from zero rated to the normal rating of 14%. Okay, so now I'm sure you have a clear picture of the difference between exempt supplies and zero rated. Now, let's look at activities and transactions that we involve ourselves in and let's identify the VAT. Trading stock purchased. Immediately, we've bought the stock. What are we going to do? We're going to pay VAT. That's right. Input VAT. That's the VAT that we have paid that we can claim back from SARS. Let's look at another one. The sales of trading stock. We are selling the goods. Immediately when you see a sale involved, what does it tell you? It tells you you are going to be charging the customer VAT, as a result of which you are now owing that money to SARS. Therefore, output VAT. So clearly you can see the transaction that you are involved in gives you an indication of how it would affect the relevant VAT account. Purchase of fixed assets. Yes, if we buy fixed assets, then certainly we are paying VAT and we can claim back the VAT. Input VAT. VAT has been paid on that purchase. Sale of fixed assets. On the opposite side, if we sell fixed assets, obviously we are collecting the VAT. Output VAT, it's money that needs to be paid over to SARS. Income items, think about it. Rent income. Okay, now there's an important one here. We have interest income. Now you remember from our earlier discussion, we alluded to the fact that the moment you have interest transactions, they are VAT exempt. So remember those when you are doing your calculations. Once again, what is it? Output VAT. Now you come to your expense items such as rent expense, telephone. Now remember, once again, here, there are certain expense items on which you are not paying VAT. For example, on fuel, on rates and taxes, and any interest that you may have paid. So those items are VAT exempt and included in here. Remember, very important, fuel, there's no VAT on fuel because fuel is subject to its own levies and taxes. Once again, what's it all about? It's about input VAT because we have paid the VAT and we can claim it back from SARS. Now, at this point, remember, you need to be able to distinguish from your journals which items would be subjected to VAT and which items would not be subjected to VAT. So, what would I say in conclusion of this segment? I would say the following. Remember, important is that you are expected to be able to draw up VAT accounts from where? From given information or from your subsidiary journals. So you must know how each journal would be posted to the VAT account. So what we are saying is, don't go away, stay with us, because in our next section, you're going to see how we deal with the VAT account. So, stay with us.